Hey guys, I recently did a quick video on why I'm very intrigued when I was looking at Tattoo Shelf, and so I decided to make this kind of a series, doing quick videos on why I'm intrigued in a certain company. Now I know I talk about Dropbox a lot, but today I'm just giving you a really quick video on why I'm very intrigued. So as you see, based upon Simply Wall Street, it says this company is undervalued, and they're usually correct like 90% of the time, 20.7% undervalued. The first time I showed you this was on a company called Neo, and I showed you how undervalued it was. And I believe that was when Neo was trading around $15-16 or something like that. And now it's at $55-56. So you can see that I'm very intrigued when looking at this company. And the next thing we look at is we can see the insiders, how much the insiders own of this company. And we can see that the CEO owns 22.74% of the company. So you can see he's extremely bullish. You can also see that the management and the board of directors is pretty experienced, and based upon the book Rich Dad Poor Dad, experience is very valuable. We can also see individual insiders in total own 32.3% of the company. Then when I crunch some numbers, not only does Simply Wall Street say it's undervalued, the numbers that it's putting out and the numbers I expect it to put out also show this. So there's an average estimate of 89 cents earnings estimate. And by the way, this earnings estimate that I'm going to use to do this calculation is extremely conservative because the earnings history, Dropbox has a history for at least the past 4 quarters of beating earnings estimate. So I have no reason to believe that they won't beat the earnings estimate that what has been put out on the company so far and what people think of in the future of the company. So 89 cents is what we're using, and then we're going to multiply that times a 10%. So we're saying that they have the potential to grow that earnings just 10% per year for the next 5 years. So this is a calculation on 5 years. And then we're going to multiply it by the S&P 500 PE ratio today, which is extremely high, but I'm going to give you some other things to look at. And when you multiply it, you can see you get $52.56. And that may seem high, so I also did one with the P ratio of 20, and you get $28.66. All of these numbers are higher than the current price of Dropbox. And I'm just going to make this even more conservative. I'm going to use a P ratio of 15, which will probably be really inaccurate, but this is like the lowest. This is like the most bearish estimate. And this is $21.50. As you can see, I'm very bullish on this company. Also, when we multiply, what I think Dropbox will be able to put out is a 30% return on your money because we have that 30% margin of safety because this company is undervalued 20% just based upon the analysts' estimates and free cash flow, things like that. But when we crunch out numbers and we see how many times analysts have been wrong when estimating the future and potential this company has, they've been wrong most of the times. And so I say it's not just 20.7% undervalued, but more like 30% undervalued. So we have that margin of safety. And in Phil Towns, like 4M's, that rule, he says margin of safety, moat, management, and meaning. This company definitely has a meaning, definitely has good management, definitely has your margin of safety. It has lots of moats that make me attractive, makes this company attractive in the first place. Because I do think the digital workspace is going to grow in a massive pace. With all that being said, I do expect this company to grow by at least 30% from this time to next year. But over 5 years, it has the potential to do that for your investment. And if we do that, well, we can see that in 5 years, this company or your $10,000 investment in this company could be worth $37,000. So I really am very bullish on Dropbox, if you can't tell already. Also, you can see kind of some growth numbers that they're putting out. And remember, they're usually always wrong. And as you can see, it all looks extremely higher than my 10% growth rate that I put on the EPS growth. Also, yeah, check out my video on Tattoo Shelf where I told you why I'm intrigued on that company as well, because there's a good reason why I'm intrigued. Same thing with Dropbox. As you can see, why I'm very intrigued in this company. Sorry about this. I was looking at this because I haven't finished the research on the management other than the CEO and the person really behind Tattoo Shelf. I haven't looked at the chief financial officer, so I felt like I needed to look at that. But thank you so much for watching. Make sure to subscribe, hit the like button. I do think Dropbox is a really good company with moat, margin safety, management, and meaning. Therefore, you can see why I'm extremely bullish on this company. Thank you so much for watching, and goodbye.